Welcome back to Switzer. Last time Lance Lai from Accountancy Invest shared his technical charts crystal ball, he was optimistic and it worked out pretty nicely, particularly locally for stocks. But what is he seeing in the sell-in May months? Should we stay or should we run away? Lance Lai, good to see you, mate.
How are you, Peter?
Fantastic. So before we get to your clip, we always bring your clip on and tell people what you said last time. Just give us a summary, anyway, of what you did say and what actually happened.
Well, basically, I thought that the markets were looking positive.
Yep.
And I thought that it was probably going to etch up. Most of the markets did etch up, and in particular Australia did, but they've come off in some of the international markets, and we're really probably in the same position that we were in last month, actually, when I came on.
Okay. And as we're waiting for our little video clip to turn up, what's your feeling before we go to the charts, going forward? What's the outlook for May? Because as I was alluding to, May's are famous for selling May and go away. What are you seeing, Lance?
Well, in the last few years, Peter, we've been doing the sell in May bit, and it's worked really well.
Yes, it has.
You know what? I'm not so sure that this year we need to necessarily sell in May.
I've got the same feeling as well.
Is that right?
Yeah, I have.
Interesting.
Now, I wanted some technical reinforcement for that point of view.
Well, we can have a look at that in a minute.
Okay, fine. All right, so it looks as though they haven't got the clip here. We'll do it at the end. We'll do the show-off bit at the end.
Okay.
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 And let's tell us about the first chart that you want to talk about.
So I wanted to talk about the Aussie index.
Okay.
And so what happened there was...
the chart will come up in a second.
Okay, so what will happen, what you'll see there is that when I came on the show, it was 5112 at the time, and I said that it would go up to 5548. Now, that was a resistance level that was 3% higher. And in fact, if the clip played, we actually hit that on the 28th of April.
There's a chart there now, Lance.
There it is. Okay, there you go.
Okay.
So you can see A that's marked there, unfortunately, with the red line, which you
Still, it can stand out. That's okay.
Right. So you can see there that's 5112 at the time when I sort of came on the show. And so not 512. It's actually at that time it was 5. Anyway, it came on.
It was around the 512.
That's right. Yeah. And so what happened was I said it'd go to that little R that's on the right there, which was 3% higher. It actually went there on the 28th, on Monday, right, of this week. It blipped up a little bit high and then came off again. And what you can see there...
There's a resistance level, isn't it, Lance?
Yeah, that's what the R's for.
Yeah.
And you can see that it's actually gone up 28%. In 17 months, and that's as at 29th of April, which was, just recently, right?
Well, Lance, this is why people watch this show. Even though I'm called a perpetual bull, I will change one day, but this is what I was hoping for, and we got it.
Well, you see, it's still looking very positive, you see, and this is the reason why I
tell people why it's still looking positive. Is it the yellow line pointing up?
The yellow line is the 200-day moving average that's pointing up very nicely.
You're a long way from it.
We're a long way from it.
And the trend's still up.
The trend's still up, and in fact, on the very top of the chart, you can see there, there's a little top bit of the R.
Yeah.
And what I said that, the top part is where I think it could go to, which is the 5995 that we spoke of. It's just under the 6,000 mark.
You don't necessarily give us a time frame.
No.
But it doesn't matter. The thing is that what you're seeing momentum-wise in these charts, 5995 is a distinct possibility.
And it's always been around this time of the year that I might come up with a long-term target or outlook for one of the charts. It might be a US chart, it might be Shanghai, but here it's come out for the Aussie chart. And what you can see here is that I think it's going to consolidate to the downside a little bit more. And then I think it'll go back to that little R again, which is, again going to be around about 3% or so higher.
And then resume the march up.
Okay,
great. So let's go to the next one, Lance.
Sure.
What country are we going to now?
Well, we're going to go to the US.
Okay.
I'm going to go
Good
to
old US.
The US and the S&P 500.
Okay, so you made the point that we've done better. They've basically gone sideways, right?
Correct. So they've really gone pretty much nowhere. I mean, they when the chart comes on,
there it is.
There it is. See, we're at 1884, and the A there that you can see, which stands for April. You know, when the April 1st, which is when I was on, you can see there that at that point it was 1874. So it's really gone. You can see from the A it's gone up. Again, it hit a 16-month high on the 4th of April to 41.2%. I thought it would continue on and actually go to the T mark, right? And that T mark still at the moment is 3.3% higher. What it did instead, it came off, found a support, and it's come back up again. And so we're currently sitting at 1884.
But Lance, once again, that yellow line, the 200-day moving average, it's looking pretty positive, isn't it?
It's not only looking positive. You can see there has not even been threatened.
No, it's a big gap,
and it's been very, very clean. You know, I think that if we can see it go to the T level, see how it trades there, and then you know what? Because it's gone up 41.2%.
I was going to say that could explain the reason why there's been a bit of a period where it's just not going anywhere. That's a big rise in 16 months.
It's a big rise, and you know what? I'm actually waiting for it to. I thought that back in January and that period where it sort of hit that M line again, I thought it would sort of come off a little bit lower to that S. It didn't. I think it's going to push high, and then it's going to come back and go sideways.
To me, it says that there isn't much cynicism towards stocks in the US at this point in time.
No, I think it's looking steady. It's a real steady as she goes.
Okay, let's go to what country now, Lance? You're taking us around the world.
Let's go to China. We'll go to Shanghai.
Shanghai.
So when that comes on, there we go. Well,
now, this is not as impressive, is it?
It hasn't, and I suppose the only positivity you could take out of that, again, you've got the big A marked there, which was on my show, the show on the 1st of April.
You're looking good there for a while, Lance.
Well, what I said was that the T, as you can see there, I said it would go up to the T, and you know that point was 2.7% higher, and as you know, I don't go for the long term, right? It actually, as you can see, went up, it crossed it, and then it's come back down. So it's actually done what I thought it would do. And if you traded that, it's perfect. What it then did was it topped out on the 10th of April, okay, and it came at 4.9%. It went to 2146, which is that
the S one, is it?
No, it actually goes beyond the T, and then it crosses back down below the 200-day moving average, right? And as it comes back down, what's happened is it's come back within that two, you know, the two lines going across on the bottom with the S.
Is that a triple bottom again there, Lance?
It is.
A triple bottom.
And so you know what I think, Peter? Because it is sitting above the B, which is the bad line that we've talked about. That's at one.
It's not going near the bad line, is it?
And it's actually held within the support zone. I call that the support zone.
That's a good zone.
And that support zone, it's gone into that 3 times now. It's slightly above the top of it, and I think it's going to go back up to the T again
and test it.
And I reckon it's going to go to the when this starts to move positive, I think it'll go to the R line before it comes off.
Well, Lance, so far 3 charts, and you've made me feel happy about my very long position in stocks.
And hence, I don't think that this sell in May and go away.
It's not going to work.
Today's the 1st of May, and you wouldn't sort of necessarily base it entirely off today, right? But if you had to, and I'm here to sort of make a call, I would say, I don't know. I think out of the last few years I've been on this show, I wouldn't necessarily be selling in May, and I'm going away.
Okay. So the interesting thing also is that I did some analysis for the Switzer Super Report last Saturday, and I found that over the last 25 years, only 9 times would you have come out on top if you'd sold in May and stayed away till September. That was the old saying: sell in May, come back on St Ledger Day, which is the second Saturday in May and in September. And you've only made money 9 times out of 25, and often when they do sell in May, it's wise to be a buyer then and then pick up the big boom in September anyway. So the saying probably should be wait for the selling May, then buy and stay.
And just a question, Peter, how many times of those 9 times did they sort of fall within the last, say, 5 years?
Well, a couple of them, but they were all related to big drama events. You know, the dot-com bust happened there around GFC. You're right. That was when it was selling a May and going away was a really good strategy. Are we out of charts or what?
Got one more, mate.
One more, quickly on before they wind us up.
So the next chart
is the Aussie dollar,
is the Aussie dollar.
Yeah.
And so again, A was when I was on in April.
Yeah.
At that time, there's a little R that you can sort of see, right?
Yeah.
And I said it would go to that little R.
Yeah, hit it,
hit it, and it's come off.
And that's also saying, people sweating on a falling Aussie dollar, it ain't going to happen for a while.
Well, it ain't going to happen for a while now. What's really interesting with this chart, actually, this is not the Aussie dollar chart.
Isn't it?
No, well, this
it's right. No wonder.
Exactly. Look, the Aussie dollar chart, what happened was...
Our time is in summary, those tells.
In summary,
yep.
I think it's actually going to go up to 95 cents.
Okay.
It's currently at 92. It's currently at...
On your charts, we're ahead of 95.
I reckon.
All right, buddy. Great to see you. And next time we'll get that clip. We're out of time. But as always, looking forward to your predictions coming true.
Thank you, Peter.
Cheers. That's the show for tonight. We are out of time, so I'll see you tomorrow night.